So there are more companies being added to the entity list. It's a list of companies and organizations that U.S. financial and even academic institutions cannot do any business or exchange with. Potential prohibition against Chinese land buying near national security locations. So that, I am against the way that they do it. I'm not against like the fact that there might be some vetting process for all foreign investors of land around military installations. But that's not what is being discussed. It's very targeted on Chinese citizens. Broader use of CFIUS. And then, of course, as we heard in the discussion, some lawmakers are suggesting a broad prohibition against Chinese students studying STEM in the US. That will be catastrophic for the entire University of California, including UCSD. Because so this is what happens, right? So of course there are some federal grants, where DoD grants all participants that be U.S. citizens. That's in place sort of to safeguard certain knowledge. Other federal grants, like for cancer research, the United States does not produce enough science graduate students to work in these labs. They just do not exist. So what do you want? Right, so we have to recruit them. And of course, China, as well as India, produce very large number of STEM undergraduates so that they come and help us. So a lot of the innovation that we see is because of our attractiveness to these potential graduate students to come to the United States. Okay, so next slide. So very quickly, I think this because, so this is the combined US and Chinese GDP as a share of global GDP. So what you see is that it's a flat line. It's like, well, what's so interesting about that? What's interesting about that is that the two largest economies of the world, the reason why we're still the two largest economies of the world is because we can maintain growth rates such that our share in the global economy does not decline. So you see other countries like Japan, United Kingdom is a classic case, where you pay a pretty high percentage of global GDP. They have fallen to a very significant level because their institutions are not very efficient. They're not able to attract the talent. So they're kind of economically irrelevant. Of course, we still love watching The Crown, of course. But China and the US are the two countries that, in the case of China, because they're a manufacturing powerhouse, in the case of the United States, because we're an innovation powerhouse, we are able to maintain economic growth such that the combined GDP does not fall, actually, despite a lot of turmoil in the past few years. The next slide, please. Well, I'll skip this one in the interest of time. I'll skip this one also. This is basically saying, tariffs, costs of inflation. This is a very good estimate, although we're going to, in collaboration with our colleague Mark Mueller, produce even better estimates. So this is what is going to be lost to the income of all these states from just the initial sort of 30 to 40% tariff rates. As you can see, almost every single state is going to lose 0.6% in real income. And so now, somebody's like, well, it's not a big deal, 0.6%. That is actually the economic growth rates of a lot of states. It's like US growth rate is not especially high. Well, so it's probably like around 1.5 to 2% a year. So basically, even just the initial round of tariff will take half of the growth rates from most United States. And so these are US states. The current tariff rates of 145% is going to have an over 1% impact on the economy of most states in the United States. People are going to buy less. They're going to make less money. So it's a real impact on American households. Next one. So this one, meanwhile, China is investing in industrial capacity around the world to evade tariffs. So I guess that's actually the good news, which is despite the tariffs, because Chinese manufacturing is spreading around the world, unless we literally impose 100% tariff on every country around the world, China will still be able to ship a lot of competitively priced goods to the United States. We'll go to the next one after this. Yeah, so as you can see, It says US science and engineering doctoral graduates who are from different countries. Is China and India the top two lines, with China being, significantly higher even than the PhDs who are originally from India. And then you have like all these other countries which they do contribute to American science, but it's much, much lower level than China. And again, the reason is because China just produced so many more STEM undergraduates than every other country on earth. And if we want to innovate with high level human capital, we have to attract a large number of graduate students from China, or we're going to fall behind. That's pretty much to see going to there's some. Yeah, this is basically, well, so this is like, some people are like, oh, Chinese grad students, they will come study in the US and go back to China and help China. That is patently false. So this is data collected by the NSF actually. So I'm looking at different cohorts of grad students from China and India, and the state rate under China, as you can see, is like 85 to 95% for every single cohort starting in the 2000s. So, the whole notion that, they're going to go back and help Chinese government, whatever. I'm sure some people did that, and why not? It's their country, they should go and help their country. But the vast, vast majority of Chinese grad students actually stay in the United States and help us. I think that's, I guess I'll skip this. Well, yeah, just skip these. So I guess I'll start, I will stop here. And I would welcome any questions from all of you. Yeah.
Not the smartest question, but is it because a lot of folks that come over here don't want to live in China anymore?
Yeah. Yeah. So I do think that there's a number of opportunities in China. Is more limited. And you have these tech companies, and of course, they're very attractive. But then it's like wrong, or they just go and help with the Chinese missile program. It's not so great, actually. And I talk to people from China, like, oh, why don't you just go work with the missile program, or something like that. But it's like, well, this is not the 1950s. So people don't want to hide in a cave and work for the Chinese government for no money. They would rather stay in Silicon Valley and make their high salary figures, send their kids to fancy schools. So that's why the vast majority end up staying, because we do provide much better work-life balance, working environment, salary, etc. Yeah.
I noticed Iran was high on that list of students.
Yeah, so we
Can you repeat the questions for the?
Yeah. So she says she noticed that there are some grad students from Iran, STEM graduate students studying in the US. That is true. Yeah, because Iran also, has pretty good STEM undergraduate education, and there's currently, not that I know, there's no prohibition against Iranian students from studying in the United States.
Part of the China initiative actually was also targeting Iranian students and scientists.
So, but the China initiative does not ban students from studying. It's just like a profiling of students from China, assuming that they're more likely to be guilty of certain crimes, even though that may not be the case. But Iranian students, yes, they're allowed to study, but they are, if the China initiative were to be revived, that actually applies to students from Russia, Iran, and China. Yeah.
Some people describe President Trump as a macho man. And President Xi is probably more than that. Are there reasonable expectations that something can really be achieved within the short term, given the personalities of these two guys?
So that is the question. Given that President Trump is a macho man and Xi's no pushover, how long is this standoff going to last? I actually think it's going to last longer than what the White House is expecting. Because I think the White House you know, and actually, they're not unreasonable in expecting that, because, you know, as soon as all these crazy tariff rates were announced, Japanese government, the Vietnamese government immediately called the White House, begged Trump, you know, for a meeting, and, you know, negotiations started in earnest. That is not the case with China, nor is it going to be the case with China. Because, so you're like, well, why is that the case? So if you look at the revenue impact of the tariffs, of the trade war, it doesn't actually affect the Chinese government. It will affect the US government a lot more. And the reason is because part of how the Chinese government subsidizes export is to collect no taxes from export industries. So if you didn't collect any taxes from them to begin with, if export were to decline, you're not going to collect any less taxes from export industry, because you're still collecting taxes from them. So the other side is that, well, there's going to be unemployment, and you have to, you know, pay unemployment insurance. Guess what? Unemployment insurance in China at the minimal level is like $200 per person per month. Let's say there's, you know, 5 million people go unemployed, which is kind of like a median estimate. It doesn't cost that much money to pay for them, pay unemployment insurance. Whereas in the United States, equivalent unemployment insurance is, you know, this $1,500, $2,000 a month is going to cost a lot more. So they can last longer than we can. I mean, on top of it, of course, there's no electoral pressure in China, whereas in the US, it's going to be a midterm election. So the Chinese is actually waiting until the midterm election, until they can get a better deal. This is certainly far longer than what the White House had expected, I would guess.
Well, why do you think the White House so miscalculated this? I mean, is that just Trump himself or the advisors around him? I mean, this should have been obvious. I mean,
Well, so I don't know. So maybe there's like 4-dimensional chess and all that. No, but my guess is like these are people who live in the 1980s. They believe the US still has the same power as it did in the 1980s. Can make every country on earth do things at will, and still has a lot of industrial capacity. But this is not the 1980s.
I know, and I know that's sort of the Trump aura too. Just amazing. I mean, so surprising.
Yeah. Well, it's
That's
not,
not-
but it's not. Yeah.
You see the that we have that's the trend for the different manufacturers and to start with it. You see the bond market that implies selling the US assets, US dollar valuation dropped down because of the stability. So what's your opinion regarding that?
So
Can you repeat the question, please?
Yeah. So it's like, what is the impact of the trade war on basically the dollar's role, you know, the global financial market, more or less. So I'm not so pessimistic. So you will notice that the bond market really freaked out because of Jerome Powell's threatening firing. That threatened central bank independence. That will have a much bigger impact on the bond market, which is really the old financial market, you know, as they say. In the stock market, actually, there will be this weird effect where if the trade war actually causes a recession in the US, which is my expectation certainly, and also the expectation of the Chinese government, that actually will help the dollar because bonds are going to rally, right? Because that's if there's a real recession in the US, interest rates will come down. That means bond prices will go up. Actually, so and then like all the international investors will still rush in to buy dollar assets, buy US government bonds. So I think the main thing is central bank independence, but I think there is another fundamental risk, which is right now it's like, oh well, for Powell's sake, we don't have to worry about it. But that only happened because Scott Bessent stormed into Donald Trump's office and say, cannot fire this guy because you know everyone's going to lose faith in the dollar. Imagine if Scott Bessent, who is a very smart guy, I've met him a couple of times and so on and so forth, if he got fired by Trump, which totally can happen at some point, then I think that we might see another round of free fall of all kinds of different assets. Right, yeah.
Yeah, so If tariff uncertainty continues, like, for example, let's say it just postpones the tariffs for another 90 days. And we get this kind of back and forth, but nothing actually goes into effect. Would you think that would still cause a recession with all the uncertainty happening still?
Yeah, so that's a really good question, whether that's gonna cause a recession, this delay. So the delay thing do help because basically, if there's definitely a delay, then like all the importers currently would just rush in their order and hope and pray that the goods will arrive before the end of these windows, these delay windows. So I guess we're kind of seeing that happen right now, where people are like just placing these humongous orders and saying, okay, I'm gonna order everything that I need for Christmas, and hope that it arrives, but then if the tariffs come into effect nonetheless in June or July or whatever, the economy is going to start turning south, and then by Christmas you might have some people sitting on either with no inventory or like huge amount of inventory that they can sell to consumers. So that could be quite bad for the economy. But in general, just kind of flip-flopping in policies is very bad for businesses because they don't know what to do in this situation. But yeah, so there's like 90-day delay turns into another 90-day delay. We could avoid recession this year. Just because by the time we get to September, that's pretty much the whole year. So even if fourth quarter turns, the whole year is still going to have like positive GDP, which by definition is still not a recession, even though it's going to be a gloomy non-recession. Yeah.
Can you maybe just take us into a hypothetical room where President Xi is sitting with a cabinet facing this issue and just trying to help us understand how the Chinese would think about their vulnerabilities in this trade war? Because I mean, I think the US element of it, I think we spent the last hour and a half talking about that, but where I'm a little lost is, I assume the US is the largest export market for China. China's economy is growing, but it's clearly not what it used to be, demographic issues and so on. I just want to understand how where the Chinese see their biggest vulnerabilities and weaknesses in the situation.
First of all, I guess I would describe how policymaking is different in China compared to the current White House. As far as I can tell, just reading the Wall Street Journal and like Washington Post and stuff like that, like there's no process in the current White House. I mean, literally, someone would run into his office and say, "We need to do this," and he's like, "Yeah, I mean," and then something another person runs into his house, "We need to do something else," so do something else. In China, you see a much more deliberative procedural process, which also has its flaws, I would say. But basically, you have all these think tanks in the government. And a long time ago, I don't know how many years ago, well, so definitely going back 2018, during the first round of the US terror, the Chinese government has told all these different think tanks, like, think about what's going to happen to our economy, to the American economy, if Trump were to increase tariff rates, to 50%, to 100%, to 150%. So all the scenarios, and they're very good economists in China, of course, just like we have very good economists, except the current White House is not talking to our good economists. Instead, they're talking to the worst economists who got a degree from Harvard. For some God knows whatever reason he got through his exam. Actually, there are two people like that. One is a well-known, our one colleague to the north. They used to work at UC Irvine. But there are others like him. So the best economists come up with all these scenarios. So they knew the impact, and then so they send these scenarios to different ministries. So the Ministry of Finance would say, okay, if this were to happen, this is what we do. We will cut taxes, we'll increase unemployment insurance. The People's Bank of China say, okay, this is what we do. If there's tariff, we're going to help SMEs more with more loans and stuff. So as we saw the tariffs being announced in the US, simultaneously you see all the ministries in China saying, okay, according to the plan that we made, 5 years ago, this is what we're going to do. That's why I see. So all these policies are being rolled out. So this is what I'm saying. Like, if you get into a staring contest with the Chinese government, you're not gonna win. You know, you could win some other way, but like, so the Chinese government, they have some incentives to negotiate, but obviously they don't want their export to collapse, they don't want higher unemployment. But if by waiting a year or so, they believe they can get a better deal, which is possibly true, they can wait a year or two. Oh, yeah, please.
Yeah, I've got actually a couple of questions. The first one is, if you could recommend some sources for reading on these kinds of topics. I've been reading, like Pillsbury, Graham and Allison. Reading about the 2047 plan and the city's traffic center. Do you have other sources that you would recommend on these topics? That's question one. And the second one is, by the time tariffs are at the level they are now between the United States and China, it's essentially a declaration. There's really no trade going to happen, except for in the areas where there's exception. Not from the Chinese perspective, but from the United States perspective. That can't go on for very long. Do you have any thoughts on how long that can go on before it starts to get dangerous? Not to the economy.
Wait, how long can what go on here?
How long we can have this kind of zero trade environment? The United States starts to think about guns.
Guns.
Or whatever.
Yeah.
Go on forever.
Well, so first of all, I don't think, you know, just slapping tariffs just on China is going to disrupt trade as much as even some of the model estimates. Just because a part of the long-term plan of the Chinese government was to encourage larger Chinese companies like BYD to set up factories outside of China. So CATL, BYD, they started building up production capacity outside of China because they sort of knew that there could be very high tariffs. So then what you're going to see is that, you know, so here we are, Donald Trump's making deals with Mexico, Japan, all these different countries, they make good deals. Geez, guess what? You know, there are a lot of Chinese factories in all these different countries. So those countries can either sell their parts to another local partner in those countries, and they will sell those goods to the United States. And so China is still exporting in a sense, but they do it indirectly by, so this is not transshipment. So there will be some transshipment also, but this is just like Chinese companies using a lot of Chinese parts to produce things in third-party countries, which then are sold to the United States. So that will continue unless the Trump administration rolls out additional policies to stop that. Although if they were to do that, that will really piss off a lot of different countries, right? Because for them, that's local economic growth. You know, it's like, well, what's with the, you know, Mexican government doesn't care if some Chinese companies that are hiring local employees to produce stuff for the United States, because that's GDP for them, that's tax revenue for them. They want that. And so, you know, if you just try to stop it, it's going to generate a lot of ill will. So I don't think it will get to that point just because a lot of trade will still happen. It will hurt the smaller companies in China because they're not able to relocate to third-party countries. So they're going to go under, there's going to be unemployment. And then of course, US consumers, some of the smaller US importers, you know, people, I heard this story like these people, they make these bibs, like silicone bibs for little kids. This is great. And actually, I bought some myself for my nieces. Like you can wash them very easily. You know, they get less dirty. So those companies will go out of business because the whole business model is like importing from China and then selling to the US consumers. They all go under. So in the US, there'll be, you know, a couple million unemployment. In China, 5 or 6 million unemployment. It's not catastrophic. So it's not like 1941 where in Japan it's like we're running out of, you know, copper, you know, whatever. I mean, we can't economically survive. Neither country will be in that situation.
Okay. What about other sources of authors?
Oh, so some of this intuition is working on some stuff on my own. The best thing is, you know, obviously just read the chatter of Chinese economists. If you're able to subscribe to Caixin Media, which is like the Economists of China, they have an English edition. I would definitely subscribe to it because they publish a lot of stories on like, you know, political matters among the economists in China, which is really informative.
Yeah, following that story, I noticed that when you compare the GDP between different countries, you quoted PRC sources in the slide. So to say the least, the data from that country is inaccurate. Right? If I say strongly, it's not trustworthy. So is there any better sources that we can compare the data between countries? And regarding the vulnerability, I think maybe even President Xi Jinping doesn't know the exact numbers, and so he may make misjudgment between the relationship.
Well, yeah, so the GDP data is, somewhat watery, as they say in China. Inflation data is a bit watery, but other data series is pretty reliable, like tax revenue is pretty good. Financial data is pretty good, but with respect to the trade war, I don't think fake data will be a major problem, just because in some of the scenarios, they did anticipate like pretty high levels of unemployment. Maybe it will end up to be even higher than what some experts had anticipated. Maybe you get like 10 million people unemployed. But in this case, because they can clearly just blame the United States, I don't think anyone will hesitate to reveal these really bad numbers, because in a sense, the worse the numbers are, the more they can blame the US and the more resources maybe some ministry can get. It's like, oh, because we're countering the US, we need more money to get approved. So I don't think fake data will be such a big problem in this case. But geez, anyway, we're out of time. I'm happy. I'll stick around for another 20 minutes at the reception upstairs. And I look forward to talking to you more. Thank you all for coming.